Hey folks, going on a little bit early, trying to get everything ready to go because we have some economic data here to talk about. I think it's going to be market moving for the rest of the day, so I wanted to get this passed and out to you folks. Right now, we had the market PMI, which is Purchasing Managers Index. This is one of those data points that I like to look at because it is so far forward looking. And that number came out at 58.4. Anything above 50, folks, is expansion. So something to note here in the United States, we are still seeing expansion with this PMI number. But one of the caveats to that number is it's the lowest reading we've seen in over a year. So we're seeing these manufacturing numbers pull back, something I was telling you folks you needed to keep an eye on because this is going to be the demand driver, especially for things like crude oil, which we got a chart up of right here, right now. I think we'll probably see a little bit of weakness here based on some of these economic data points that we're getting here today and throughout the week. It's going to be a really busy week for economic data. Like I said, we've got the PMI numbers right now. Sorry about that. I had a moth flying around. The PMI numbers, and something to note, we're going to be having these PMI numbers coming out right now for the ones that we really like to look at. It's the Institute for Supply Management PMI. Now, remember, the flash estimates is what we get across the pond, but here in the United States, we look for our manufacturing in the form of ISM, Institute for Supply Management. That number coming in at 60.8, expected to be 60.4, so better than expected there on that front. One of the things, though, that was a wet blanket was the construction spending coming in at negative 0.5, expected to be a positive 6, so missing by over a percentage point there. So a big miss on construction spending. And then ISM manufacturing, prices paid higher than expected, 85.7, expected to be 82.2. So right now, let's put all of this together, seeing a little bit of expansion in our ISM manufacturing number. The market number did miss, but that's not going to be the headline number we're really looking at. That's what the across the pond really looks for. And all of those numbers pretty much in line with expectations for their manufacturing PMIs and data points for their market numbers. Like I said, we're going to look at those PMI numbers that we get for the Institute for Supply Management. That number, like I said, better than expected. So before you guys go, make sure you guys hit that subscribe button and the like button right next to it, or actually it's a bell that gives you a notification when I come in unannounced like I'm doing right now. This is scheduled for about an hour and a half away from now, but I wanted to get on to these ISM numbers, which I actually was expecting a little bit weaker numbers there. Seeing some strength there, a bit of a surprise here in the markets today. So I think that the risk is going to be to the upside, folks, because I think a lot of folks were expecting these economic data points coming in a little bit weaker than expected. One thing, though, these came in better. So that is going to be a bull move for the upside, and we're getting earnings. They're coming in a little bit better than expected. So risk turning to be to the upside right now. So let's move over to the markets. Like I said, crude oil making that move higher. That's going to be on the expectations of demand from the manufacturing sector, folks. Gold futures is right back at the point of control. We lost the 1800s for a little bit, but I do believe we're seeing those prices paid rally higher. That's inflationary. One thing we've been hearing from the Fed governors. Later on this week, we are going to be having an FOMC meeting, folks, on Wednesday. So keep your eyes out for that. That's another thing I wanted to talk about. That they're going to be getting what do they call it? It's not the beige book. The blue book is what they're going to be looking at for all of our economic data points, kind of put all into one place. We get the beige book. That's about 2 weeks earlier than this meeting. VIX is moving a little bit higher, which we're seeing the weakness come off of these all-time highs that were created overnight. That was on the data points that we saw from the market ISM. And that's where we'll see that weakness show up when we break this down into a daily chart. Here's the Dow Jones Industrial Average. Let's just go ahead and break it down. You can see right here on that data point for the market, ISM was pretty weak here. We haven't seen a real bounce off of the Institute for Supply Management, ISM. So keep your eyes out for that. I think we'll probably see a little bit of strength heading into the end of the day. But if we don't and start finishing off, we're going to get another topping pattern here. Something we're seeing here is this trend channel is acting as resistance just like it has acted as support before. We talk about this in the swing trade webinars, where these are the types of things we're looking for with these trend channels. And we are now finding that as a resistance area on this line. So if you're following this and have been able to make some trades on it, let me know. Throw it over there in the comment section. Love to hear from you folks, what you guys are looking for. So throughout this video, make sure you guys are commenting. And then we got the E-mini S&Ps again overnight. We got the economic data point for the market ISM. That was pretty weak. Like I said, it was the lowest reading we've seen in over a year. That's been the catalyst of the sell-off here in the equities across the board. Despite the fact that I tried to get on here right when we were getting that ISM data point, it has not slowed down this sell-off at all. All right. Las Vegas Sands, I wanted to talk about this yesterday, or on Friday. We started seeing some weakness. I talked about having a trade in here to try and get out of half of my Las Vegas Sands. That is still a working order, folks. I'm still trying to get out of this trade to cover this gap. It's right around $41.50. I think I'm working around 41.66. So just below covering that gap is what I'm looking for to get executed on a pop in this trade here. I haven't added the covered calls because obviously on Friday we started seeing this market sell off. My covered calls was at a much higher price. I needed about a dollar move to the upside. If I got that dollar move to the upside, I would have gotten clipped on my outright sale of my stock, and that move would have likely been able to increase the premiums in the strike that I was looking for by about 20 cents. So I would have gotten hit on the covered call strategy around that 45 strike and gotten clipped on my sale of half of my stock, which was exactly what I was looking for. That didn't happen. Still working that order to get out of half of my Las Vegas Sands. So just making sure everybody is following along there on that one. All right. So folks, before you go, make sure you guys like that, feeds those bots, gets them out there, finding somebody like you to share this information with. Comment over there in the section next to the window here. We will come back around, make sure everybody's clear of concept. And finally, don't forget to subscribe and hit the little bell right next to it so that you get that notification when we're coming in unannounced. All right, that's all I got for you guys. Have a great day. And if you can't take that, take it easy.